This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview is for the week of August the 24th through the 28th, put together by Charles Rotblatt, our senior market analyst, who is here with me once again. You didn't think any different, did you? He's here every week to tell us what's going on in the week ahead. And this particular week, we have 76 companies confirmed to be reporting earnings. Where's the earnings focus at this week?
Well, I think the big thing is going to be Dell. That's obviously the biggest company reporting. We do have Staples, we do have Tiffany. We have a total of 6 S&P 500 companies reporting. But Dell's a huge company, and people are going to look at it. They want to know how back-to-school sales are.
Right.
You know, what's their viewpoint as far as the upcoming release of Windows 7 and what's that going to do for computers. Estimates have been kind of flat for Dell. Full-year estimates are down just ever so slightly, but the company does have a track record of beating estimates. So it's very possible we could have some good news coming out of Round Rock, Texas.
All right. Well, as far as the markets are concerned, even though there's been some choppiness there of late, traders seem to like what they hear, at least coming from, where was that, Jackson Hole, Wyoming, when Ben Bernanke got up and said, chairman of the central bank, said, basically, we've saved the world.
Well, I don't think it's even so much Ben, although Ben's comments certainly help, but really it's existing home sales numbers.
Yep.
That really propelled the markets higher as we record this on Friday, and August 21st. And I think the question is, how much more momentum will we see next week? Certainly, the momentum seems to be to the upside. We can talk all we want about light volume, and I've done more than my fair share of talking about, but the clear direction of stocks is higher right now. Don't know how long this rally is going to last, but it's clearly moving up. I think one of the keys, though, next week will be Wednesday's new home sales report. Existing home sales rose for 4 consecutive months. New home sales have been up for 3 consecutive months. It should be interesting to see what happened in July, whether or not July kept the momentum going, and what happened with prices. I know a lot of builders are also concerned about the new home buyer's credit, about the first-time buyer's credit actually expiring in November. So then there's also a question, are people trying to rush in now because their credit's available and they're worried about what's going to happen in the future? But I think certainly a lot of eyes are going to be on that report to see what happens. And that could have some impact as far as the markets. But certainly when you look at the wobbliness that we had in China earlier this week, it really didn't do that much to deter stocks. For whatever reason, the markets seem to move higher. Credit the fast money for it.
Well, there's people on both sides of the moving higher argument as well. I mean, last week, you had the president of A&P grocery stores out there saying that the stock market has definitely gotten ahead of the consumer. And then on the flip side, you've had other analysts, industry analysts and market analysts saying that the stock market's set for another surge higher. So I'm getting confused with these mixed messages.
Well, what's happening right now is the markets are clearly climbing a wall of worry. And there's a lot of us, including myself, that are looking at this with a lot of skepticism. I do worry that the market's getting ahead of itself, that some of these traders are too optimistic. But in reality, when we look at volume has been very light. It's continued to decline, and some people might say it's late summer, but really for the past several months, we've seen volume levels drop, and that's continuing right now. And so anytime you have a smaller group of people directing trading, you're going to get more volatile swings, and right now they're pushing stocks higher. It is climbing a wall of worry, and although the economy is clearly moving towards stabilization, I am concerned. I do think the markets have gotten ahead of themselves. We are losing the tailwind of second quarter earnings. Clearly, analysts were too pessimistic. We won't have that going forward, particularly through the month of September, but the momentum of the market right now with the S&P 500 trading at new highs for the year, even if you're in the bearish camp or at least in a cautious camp, you have to acknowledge the trend and realize that is what's going on right now.
I noticed you blew by my Bernanke comment, but one thing he did say in his remarks is that the prospects for a return to economic growth in the near term appear to be good. Do you necessarily see it that way? I mean, growth is a strong word at this particular point.
Again, I don't think it's a question as to whether or not we'll see growth. It's really more of a question of what type of growth will we see. Right now, a lot of people are actually calling for 3% growth in GDP. Certainly, if you look at Cash for Clunkers, that program was an overwhelming success in terms of getting cars sold, and that'll definitely help third quarter GDP. But I'm a little bit more worried about what's going to happen in the fourth quarter and really what's going to happen in 2010. We're getting to a point right now where the year-over-year comps are going to be pretty easy. So for us to show growth, the economy isn't going to have to move that much in the right direction to really show growth. But it's more of a question of what type of growth. And I think we're looking at a period where unemployment stays high. We just have initial jobless claims rise again. And a lot of people are having troubles finding work. So even though the data might show the economy moving in the right direction, there's going to be a lot of people concerned and a lot of people who are having difficulty either finding jobs are finding jobs that are paying less salaries than they did before. And I think it's worth noting that 1 out of 6 Americans right now is either unemployed or underemployed. Either unemployed or working part-time jobs, and that's a conservative figure.
Right. All right. Well, thanks for the good news. If you want to check out companies that could surprise to the upside as well as at least 1 or 2 that could surprise to the downside, that information is contained in the text version of the earnings preview on the homepage of Zacks.com. That's where you can link to it from. And it is the headline that is right next to Charles' smiling photo. Earnings preview, text version, Zacks.com. Bookmark it. With Charles Rotblatt, I'm Terry Ruffalo.